Welcome back to another Ready Set Crypto video. So today we saw the market take a bit of a dump, going from a total market capitalization of 830 billion to around 670 billion over the course of about 12 hours. So of course, the first question is what's going on? What's causing this crazy drop? And it has to do with the website coinmarketcap.com. CoinMarketCap removed Korean exchanges from their coin price calculations. Given the nature of Korean exchanges, coins are about 30% pricier over there. So this instantly tanked the price on CoinMarketCap graphs. Once that happened, a large number of people did not recognize what actually happened because there was nothing really happening on Western exchanges. So a large amount of people dumped their coins trying to cut losses because of the false impression that the market was crashing. So as you can see, one website, one act can have a ripple effect across the entire crypto market. And it kind of shows us a little bit how immature this market still is. Now, it's okay to be a little bit upset with CoinMarketCap for not announcing this or putting a banner on their website or something like that just to tell people what's going on. I get that, but people also have to weigh their expectations accordingly. Every time we see the market going down like this, there's comments like, I'm concerned. Is this like the .com bubble? Is this a major correction? Are we preparing for a bear market? Now, don't get me wrong, you have every right to be concerned, and yes, we can expect a correction or crash to happen in the future. But guess what? That's the game you signed up for. We're in a bull run right now. This might go on for another couple months, or it might take a downward turn. If you can't handle that, you're probably investing with money you can't afford to lose financially or psychologically. If that's what you're doing, you should take a step back. It's probably best to sell. If you can handle it though, just use the age-old strategy of buy and hold, or even take a little bit of profit. So why am I not too concerned about this? Because cryptocurrency is still very small, whether you compare it to gold, stocks, derivatives, or actual currencies. Just because your mailman or your barber are talking about cryptocurrencies doesn't mean the price of Bitcoin is going to crash to $0. 99.5% of people are still skeptical and aren't likely to invest anytime soon. And of that remaining 0.5%, most will still only invest maybe a couple $100s just to put their toe in the water. At this point, maybe 0.1% will invest a serious amount. But even if it all comes crashing down right now, will that mean the end of blockchain and cryptocurrency? No, of course not. The .com bubble burst didn't mean the end of the internet or the NASDAQ. It was the beginning of a widespread adoption and a new era. The era that led to the blockchain. If there's one thing we learned from the .com bubble is that even if it crashes, you should hold. Look at the valuation of the NASDAQ now. It went through the roof. Of course, not everything survived. The garbage stocks disappeared. But the good ones like Amazon are now bigger than ever, and companies like Google and Apple emerged from the burst and are now worth almost $1 trillion each. My prediction is that because of this knowledge, cryptocurrency will recover a lot faster. Most people know to hold rather than panic sell now. You can make a lot of profit if you can predict accurately when the crashes will happen, but the chance of that happening is very small. It's like trying to catch a falling knife. People are also a lot more ideologically invested in cryptocurrency. Not everyone, of course. Some are only in it to get rich quick, but a lot of people really believe in the technology and are not letting go anytime soon, especially the early adopters who are not likely to throw it all away. The blockchain and cryptocurrencies have given us a peek at a decentralized economy, an economy that is not ruled by corruption from governments, from banks and the elite. Of course, there's still corruption even in this space, but it's 1,000 times better than the old economy in a lot of aspects. Furthermore, look at all the events that we survived in the past years or even in the past months. Mt. Gox didn't stop crypto. The FBI busting Silk Road didn't stop crypto. FUD from bankers, from governments, from Wall Street didn't stop crypto. In fact, they're joining the markets. China's government and the central bank didn't stop crypto. All the Bitcoin hard forks didn't stop crypto. The Bitcoin Cash versus Bitcoin Core catastrophe didn't stop crypto. The futures didn't stop crypto, etc. Look, if you're truly scared, you're probably new and invested with money you can't afford to lose financially or psychologically. In that case, it's best to just sell now while everything is coming back. But otherwise, just hold. Buy some more or take some profit. A correction or crash will not end blockchain or cryptocurrencies. It will likely come back even stronger. So next I'm going to turn it over to Doc so we can talk about technical analysis on our pick from yesterday, NEO.
Hi, this is Doc for Ready Set Crypto. Now this is a chart of NEO on TradingView, and I'm charting this versus the USD dollar tether. Now the reason that I like to chart coins against US dollar or US dollar tether is just because the US dollar doesn't move very much. So what you're getting is a more accurate representation of what the actual coin is doing as it relates to some other fixed variable. Now you can't buy NEO with US dollars. You have to convert them over to Bitcoin. So some would argue that why don't you show the NEO versus Bitcoin chart, because that's how we have to buy it. The problem is that Bitcoin moves around a lot, and so you've got two variables moving around, and I like to be able to chart where I have just basically one variable mostly moving. And in this case, it's NEO. Now, I have a number of concepts to cover with you just looking at this chart. Some might look at this chart, and if you don't have much experience with charting or technical analysis, you see a bunch of lines and squiggles on the chart, some red and green squares and blocks and things like that. These are candlesticks, right? Candlesticks, and then I have some studies on here, and these are based on price, time, and volume. One of them is the choppiness index. The choppiness index is one of my go-to studies because there's one thing that I believe in these markets, and this is what I've seen for the last few years, is that there's no such thing as overbought and oversold. Overbought and oversold is one of the first things that's taught in technical analysis, whether something is, something that runs up becomes overbought, something that sells down very quickly becomes oversold. But honestly, what I've seen is with this just inflation and money supply lately, there is no such thing as overbought. What is overbought can become more overbought. Typically in an uptrend, the oversold tends to snap back fairly quickly, and this is what we're seeing right now. So I use a different type of theory behind charting, and this is what the choppiness index helps me with, is that range contraction like this leads to range expansion. Range contraction, like this, leads to range expansion. And what the choppiness index is helping me do is identify these areas where we have high degrees of non-linear price action. This is kind of akin to having a spring wound up tighter and tighter and tighter in your hand until finally it can't stand it anymore and it flies out of your hand because it's got so much potential energy wound up. And we're seeing the same thing happen again and again in these types of charts. And actually, crypto charts are some of the best that I've seen in years because the supply-demand is not tainted by any kind of central bank interference. So here again is right at the end of December, we had NEO in a very tight coil. This is called a pennant, and broke out to the upside. And guess what we have here again? So right now, this is coming, it's a little bit into exhaustion. This is what I call exhaustion down here, is that when range expansion goes a little too far, it will run into expansion. And this brings up the second concept that I want to bring up here on the charts is the pink lines here are the Bollinger Bands. Now the Bollinger Bands just show movement from a moving average in standard deviations. And what we typically find is that when the price gets above or below one of these Bollinger Bands, so you can see the price has gotten above the Bollinger Bands, and it tends to act as sort of like the ropes in a boxing ring. That's probably the best analogy that I can give you, is that even though there's a lot of fight going on inside of there, it generally keeps the price inside the Bollinger Bands. If it goes outside, it tends to get thrown back into the bands. If it goes outside, it tends to get thrown back inside the bands. So all this might be well and great, but you might be asking yourself after yesterday's video, well, I don't have any NEO, where's a good time to buy it? Well, this depends on whether you're a fundamental investor or a technical investor. A fundamental investor doesn't really care where they get in. They just say, well, I just want to get in. And I don't really care about the price because I think the price of NEO is going to be $500 or $1,000 in the next couple of years. So what does it matter whether I get in at 90 or whether I get in at 100? Well, you might be what's called a trader, and a trader is going to use technical analysis like this to get the very best edge that they possibly can, because they might not be holding it for that long. They may just be looking for one of these swings in here. right? So a short-term swing can get you in and get you out with a lot of value, and you roll that into the next setup or the next coin, whatever you want to do. So it depends on whether you're an investor or a trader. So again, the question is, if I didn't own NEO right now, what would be a perfect buy point for this? Well, there's no such thing as a perfect buy point, but let's discuss what might be a really good one here. Now, there's a concept called swing tests. A swing test is if you see the price actually doing something like this, and you start to see these kind of sawtooth waves, what you'll find is that the horizontal support for this swing test is right around $80 or so. So if the price falls out of this pennant and comes down to this swing test, which is also going to be a confluence of the moving average on these Bollinger Bands as well as this lower trend line here. So all kinds of forces come into play to offer support right down at this $80 level. That would be an optimum buy point at this point with this current chart setup. So what we would normally see from something like that is if the price falls out of here on some kind of bad news, and anything could happen, right? Then we should see a lot of buying support coming in, a lot of orders coming in around this swing test, which is right around the $80 price target. And we should see a form of slingshot come from that. So if you're not in NEO at this point, your choices are either to just go ahead and enter now as the chart builds up energy and try to beat the next breakout to the upside, or if you want to look for a more optimum buy point, you can simply wait until the price hits around that $80 swing test. Now, the risk with that approach is that you might have NEO just breaking out of this pennant and just goes on the next tear to the upside, in which case you're left at the altar. So it's like anything else in trading, there's always a decision to make. It depends on your goals for this. If your goal is just to get in, then you get in. If you're in the middle of a bullish run like this, especially at a consolidation point, that's a more fundamental approach. If you are specifically a trader, then what you're going to do is you're going to be patient, wait for the trade and the price to come down to you, look for that optimum buy point, and then look for your exit on the subsequent run to the upside.
So guys, thank you very much for watching. If you enjoyed the video, please hit the like button. And if you're new here, please hit that subscribe button so you can continue to see high quality crypto analysis. And don't forget to hit the bell next to the subscribe button to be notified when we put out new videos. Additionally, check out the description for a link to our daily newsletter. And pretty soon here, we're going to be offering a paid advisory newsletter, which will give you insight to the private collection of coins that we're looking at, some things we're watching, and many more premium features for our paid subscribers. Thanks again for watching, guys. I'll catch you in the next one. Cheers.